Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, July 16th, 2024. It's 10:09 a.m. Eastern Time as I'm starting the video, and figured it's time to get one out. I'm seeing a lot out there, and I just saw a request for an update on gold and the miners, GDX. Was under yesterday's post for NVDA. So I replied, and I figured I'm going to start that out there. I did just fire off a post. The most important thing today, and the reason I'm starting the video, we got that sell signal. I've been waiting for NVIDIA. First was, most importantly, the trend line, which actually broke yesterday. I made some comments. I'll get to the NVIDIA in a second, but let me just do gold, get it out of the way. As I mentioned in that reply, in that comment, I don't have a position now, but may soon, and that would most likely be a short. This is GLD. This is a 60-minute chart. If I don't mention it, they're up here in the corner. You can see hourly right there. You can also see 1 hour right here. So that sometimes I forget to mention which time frame I'm on. This is pretty much the recent highs for it. Each one's ever so slightly higher. In fact, when I see that, and I'll do it right now, you can draw. Remember, you can see back here. We've been trading gold and the metals with near impunity lately, long and short. And, this is where gold bugs are getting frustrated because they're not going anywhere. This is multi-month, since April. We've been in this big range right here. I'm boxing it in for you. But we've been able to, highlight these, trading opportunities on the 60-minute chart. Divergent lows go long, divergent highs go short. But what I was just doing now is, I'll just take this line over. I'll just take that line. Like I said, these are each incremental, slightly higher highs. And so that's one bigger divergence. So when you see that on a 60, it usually doesn't get that big. Sometimes it does, but then you can view it out on the daily. That's what I like to do. And so I have different boards here. There. So I'll do the same thing, extend that high. So that was my quick answer to the that inquiry for an update. Is that, hey, I don't have a horse in this race right now, but I may soon, and that would most likely be a short, and I may even take that now. I'm going to do this video. I'm kind of fresh. I just glanced the charts. I've been standing aside lately since closing out the last long. Remember, we had most recently a long off these the divergent low right here. We hit my first target there, my second target there, my third target there, and as I mentioned, I was trading silver, and the miners is what my preferred proxy. So you get a lot more juice. So that's it, guys. Take it for what it wants. Oh, and what I said to that the subscribers, at the very least, if you're long, sometimes these divergences get burned through, and gold can pop that, take out the divergence. The very least, tighten stops up to protect profits at this point. If you are long, that would be my suggestion, not a recommendation. I make suggestions, tell you what I would do, and then you guys decide what to do with your positions. So there it is, gold. Let's look at GDX real quick. I mentioned that GDX also had on the 60 a divergent high right there, you can see. And in fact, I can do the same thing here on the 60 as I just did on the GLD 60. And that is take that divergence over from that last high. And that gives us a pretty big divergent high, which again doesn't guarantee anything, but it does indicate, like I said, there's no hard set rule or formula, but typically the bigger the divergence, the bigger the ensuing move. There it is, guys. You saw my trend line on gold. It's like GDX. It was already violated. Sometimes you break the trend line and then break down. So, take a shot here to short with a stop somewhat above the recent highs. Depends on where you're targeting. Again, with the scope of the divergences, I could see a move down towards the bottom of that range again. Let me look at silver for you, and then I'll get to the market. I'm just marking this up because, as I said, I've kind of been disengaged just lately. That's why you haven't gotten the updates. But, I always say, you're welcome to bump me anytime on anything. That was a perfect exit. Remember, we went long silver here, sold it there at T2. That was the final target. Sidestep the give back so far, 10% run, almost 10%. It's wash, rinse, repeat, guys. So this is it. When we first hit it, we didn't have divergence. Now we have divergence, as I just drew for you there. One thing, sometimes I see the PPO curl up like this. You can get divergence. It's kind of flattish. I like to see that clean separation. It's a little bit better, works a little better when you get that kind of divergence versus this flattish divergence. So what I could see too is another thrust up. We could still get a bigger, more pronounced divergent high on one more thrust up. and that might keep the divergences in gold and silver intact. If they do get burned out, then maybe we break out and run. So you can hear my voice. I don't have super strong convictions, but here, let me look at the Mr. Euro, because you know I like to factor that into my analysis, and I know that was getting up there with the divergent. I marked this up the other day. Yeah, absolutely. So last time we had a divergent high, I gave it to you back here, highlighted that. I gave you this trend line with a sell signal come below it. We broke it, and it was super impulsively. That was a big drop. You know, that's why one reason we were short the metals and miners then, and this is why we were long. It's a very, very clear and unmistakable correlation between EUR-USD, which is the euro-dollar pair, and gold and silver. So we've come full circle, guys. We were short here, we were long here, and now I think it's time. Odds favor getting short. We're at resistance on the euro-US dollar pair. You've got this major long-term downtrend line we're at. This is a busy board here. I'll turn off all the lines. I'll draw it for you. And so that says if the euro-US dollar gets rejected here, even just a little bit, that's enough to pull gold and silver down. So there's your update, guys, on the metals. Now let's get to the good stuff. The good stuff being NVIDIA. NVIDIA, like I said lately, is pretty much the stock market, I believe. And boom, there it is. Beautiful break. This is a daily. Remember, I've been giving you the 60. If you want to get a jump start, you trade on the 60, or you go down even to a shorter time frame, like the 15-minute charts. So in yesterday's reply to somebody, let me find that. Okay, that would have been here. NVIDIA testing. NVIDIA testing key uptrend line support. Let's click on that, open that up. Somebody asks, okay, so if we're to close to 127, you're saying it closes below on the hourly. Can we take a shorter by NVDA? I believe that's that 1.5 time or something time short on NVIDIA. Yep, and that was it. So basically, yeah. So I just want to make clear, because this is something I talk about often. I make a lot of terms up. One of those is called the BOD support level, benefit of the doubt. So I went on to say 127 is minor price support that comes in just below that key uptrend line. Remember, that was your first sell signal, the trend line, and it did get taken out yesterday. But when I have two support levels in very close proximity on a stock or an index, I call the lower the two the BOD, or benefit of the doubt, because you want to give it the benefit of the doubt. You're in an uptrend. We all know what happens. This has been one of the most resilient uptrends in the history of the stock market. Reeks a lot of 1999-ish, but again, technicals are technicals. And the day I stop ignoring things such as sell signals via trendline breaks, that come after divergences and other breadth indicators and low volume, bearish engulfing candles, it's the day you ought to just hang it up, because then just put all your money keep buying the dip for infinity for the rest of your life, and that would be the model. So no, I don't subscribe to that. Like I said, you all know I've been looking for a significant top for a while now, but I'm going to get to crude oil. It's just been we've had some beautiful hedges that have vastly outperformed what the QQQ for the last few weeks. We've had several sell signals. Remember, we kind of reset when I went to vacation. The most recent sell signals came when I was on vacation, right around that time, or right when I got back. I actually got a chart out to you when I was on vacation. That was a month ago. And so that's considered a reset new trade. Remember, the previous one was the previous bearish engulfing candle, which once we took the top out of that, then that took out that trade. So that was the kind of the trading plan, if you will, and therefore a solid break, and especially a 60-minute or even better, a daily close below 127 is likely to usher in the next wave of selling in NVIDIA. But this was, I got the question 10 minutes before the day was over, so I said, look, you'll have to wait till tomorrow. So what that meant is, let's go to NVIDIA. If we did close below it yesterday, not below the trend line. This is a 60-minute chart. I'm going to show you. You can see in the pop-up box to the left, that's the last candle of the day. So you clearly took out the trend line on a 60-minute closing basis, even several candles, but we were below that 127 BOD. And why was it the BOD support? Well, traders always look at recent reaction lows and highs as a pivot. But then this one had quite a few. There was a gap in there. So it was a significant enough resistance. And look, this is how it works. we went through there. We didn't just limp through. We punched down and we hit my next target. Again, it was given to you yesterday. It was for weeks now. I've had these levels, and we hit a low of 124.58 versus my 124.52. So 6 cents within 124 point security. Mere fractions of 1%, close enough for government work, and that's how it works. So you hit the next support. Support is support until unless broken. Maybe they buy it here. If this is going to prove to be a false breakdown, this would be a great time for the bulls to come gobble it up. However, any back test of the trend line, I will be highlighting. I'll tell you now in case I don't highlight it as an objective short entry add-on. But a recovery back above that trend line would be quite bullish because, again, it's not just a minor. This is a minor trend line right here, right? That was a minor trend line and broke, but look, it's impulsive. Traders are watching these levels. This is a significant trend line. This is the one I've been highlighting for a while. It's off the April lows. It has numerous reactions, which makes it even more valid. So, where some traders might not have picked up on this trend line here or this one, both of which were great sell signals. That was our bearish engulfing candle back then. That was the initial short, entry there with a stop above. This one's even more valid. So, guys, it goes either way. NVDA has been more resilient than any stock in recent years that most people can remember. So it's not going to shock me if the stock, they come in and buy the dip and they blast it above there. But, you just have to sometimes trade mechanically. Or if you have strong convictions and you believe it'll be a failed breakout, well, you can do one of two things. You can buy this support. Because I've been speaking to both the bulls and bears on the market and these stocks lately. I've made numerous times, told you can buy pullbacks to this trend line if you're bullish. And you would have made some nice trades at least. But we're back to where the last couple tests were. But you either buy here at support with a stop somewhat below or wherever you think things are going. Or if you're bullish, you can wait to see that recovery. That's the higher probability entry because if they can pop it and then pop this reaction high, especially pop that high, I can tell you unless things change here, I can see if we do happen to go anytime soon, it has to happen soon, to new high, you're still going to have big divergence, extreme overbought conditions, extreme low short interest in the NVIDIA. I know in QQQ, we just hit the other day, I checked it a couple days ago. I don't have it queued up now. We hit the lowest short interest on QQQ in the past year. That's all the NASDAQ website gives you. You can go back 12 months. By far, we just hit at the lowest, the most recent reading. And so all the ingredients are in this market for a sudden swoon down, in my opinion, based on everything I've been talking about, the breadth deterioration, the low volume indicators that I have, those sell signals, the extreme complacency. We've had some put call extremes hit recently. Hindenburg, my NASDAQ customized Hindenburg omen, firing off multiple signals. And so that's why I do this day in, day out. And I get up and I tell you that, I don't guarantee it, but I can tell you right now, the odds today are so significantly higher than, let's say, 6 months ago or 8 months ago or even 3 months ago for a sudden and swift move down, kind of rip your face off kind of move if you're, rip your face off if you're positioned wrong. So I'm not a fear monger. You guys, I'm telling you because I think the odds are there. It doesn't guarantee it's going to happen, but you have to have those ingredients. I've traded long enough that you don't see, those waterfall type sell-offs come out of the blue when market conditions are healthy, internals are okay. You don't have the bullish extremes and the low volume. There's so many indicators that have been coming together. And just because they haven't triggered at all, you've heard me use my analogies, whether you want to use cancer or anything else, ignore it. And it's just going to get worse if you act, so the market's been ignoring a lot of those red flags. And that's it. But here, guys, it's all about price. You got to, those things can build. I remember in the 90s, they built forever, and fortunately back then I was a stockbroker alongside only trader. I don't think I started shorting stocks until after the dot-com bubble. So it was a great ride up. But it was when it finally reversed, it was, I wish I could have told you I was a short seller back then to short down the entire dot-com bubble. And I'm trying to even think back if I was shorting stocks back then. But either way, like not aggressively, not working as a stockbroker. That's why I had to. That's why I opted to leave the business in 2007 before the next great bear market came. Saw that writing on the wall, and was limited in my ability to trade, especially short stocks, due to your employer, the compliance department. If you're a broker, they monitor every trade, and you can't trade actively, and you can't trade what your clients have in their accounts, and then it's considered front running if they've placed a trade that day or you've placed one for them. Anyway, so I digress. All right, this is it. So 127 is taken out. Where we hit 124, my next support level, and you see the way it works. Support is support until it's broken. So I'll break below 124.52, should bring us down. Now we've already hit this. That was my first support and minimum target zone, which was not just hit once, but hit again and bounce. So it wouldn't surprise me if we go right through there. Now it is still support. Let me say that again. I always say it. Support is support until and unless broken. So again, speaking to the bulls that are looking for new highs in NVDA, that if we take out 124.52, which was where you could have bought today if that was your thing, buy pullbacks to support, then this is even better support, much better support. And this was minor. And however, if you are bearish or, either way, you can buy that and then you want to stop a little bit below it, give enough room to, prevent a stop raid. They might want to come get your shares. But this is how it works. So once that support zone's taken out, then we go to my next target zone here, about 107 to 110, and then it should be a quick swoon down. I think we'll start to accelerate as NVIDIA, if and when it takes out this level. I think it'll be a very fast swoon down, something like this. Work our way down here, come in here a little bit, and then whoosh, whoosh, like that. That's how I would suspect it happens. Or boom, 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 more of the same. We'll see. So manage your positions. Maybe we'll get a little downtrend line forming here. I'm going to add that to my chart now. We'll see. All I can tell you definitively is the trend line's been taken out, and that's a sell signal I've been waiting for a long time, and then that minor support just below. And then you can see what happened. When it happened, of course, you look at a 1 minute chart. There's my 127. So it's not a random thing or event. You see that slide. That's the biggest. Look, this is I just went to a 1 minute chart. By far the biggest slide, the most impulsive, biggest drop in short order in NVIDIA, as far as I can scroll back, other than right here. And that was probably, I'm sure that was a break of this, that trend line. So see how this stuff works. Traders are watching these levels, and they've got short sellers stepping in when they break, and longs with their stops getting hit below those levels. And so if it plays out, then you have my trading plan. And of course, QQQ is all about NVIDIA. No mere coincidence. As soon as NVIDIA broke that support and had a quick swoon down, so did QQQ. Now let's look at QQQ. All right, QQQ, you have, this is kind of what I call a busy board. This is a 60-minute chart. I've got a trend line right here, which I believe you can see we're right on it now. So what you have is NVIDIA, which I believe is the most important stock to watch right now by far. However, it is not the market, but it's a big part of it. And if the breakdown sticks, and if NVIDIA takes out the support level that it just hit, that I just covered at the lows today, then QQQ is likely to break this line. All I can tell you definitively right now, QQQ is actually it's taken it out. I'm sorry, I must have zoomed in. I had my marker over there. So, there it is. We broke it. Now I can BOD it. There's a little candlestick there, but this is my line. I like this fit. So QQQ is now broken support, and that is a sell signal too. It's 10:28. So this candle is going to be finalized. No, that candle won't be finalized till 11. The first candle was a 30-minute candle, 9:30 to 10. Then this one will be finalized at 11. So if at 11 p.m. today, 30 minutes from now, a little over 30 minutes, we have a solid close below, that should open the door for a move down here to that next target there. And remember, these are just short-term levels. I'm still, and we have been, this is what I was talking about. This was the most recent short entries came 1, these two breaks to these trend lines, and now 3. That's the third and last trend line I have to the near-term target, which is still that for, let's see, I think I had another board for you. No, okay, I'm just going to leave it here. That primary uptrend line that comes off the mid-April lows is still my near-term, what I call kind of minimum or preferred, really preferred, not even what to call it minimum. We've already hit some minimum targets, swing target. And that is from where we're at now, if hit, and I showed you what needs to happen to get it to be hit. It's only about another 3.5% below. So it's a total drop off the highs of about 5%. Now, then that takes us over. If we start to get close to that level, I will be revisiting. These are my longer term swing and trend targets that I've given you. T1, T2, T3, T4, T5, T6. This is that same trend line off the April lows. So all the better, this is a daily time frame we're looking at now, all the better to see a solid red close below this today or any day. It doesn't matter if they bounce it today and it comes tomorrow or Thursday or Friday, but that's what I'm looking at. And also to see us fall down below my market top range. Otherwise, they can still push it to the top of the range. Remember, the top of that range would, I'd hate to go through it. I'll ride through it. I'll continue to keep those hedges. I'm going to talk about that in a second next, and we'll wrap the video up, the USO hedge and TLT when we had that. Remember, that push to 511, around 511, 512 would just give me perfect alignment for the my price targets, which I maintain based on support levels, and the fibs. And so we reversed a little shy, and so the fibs would come in close enough. So honestly, I would, again, you hear my voice. I don't want to see it bounce back up from where we're at now in another defense of that trend line. But so I like to say, support is support until unless broken. And this, forget about NVDA. NVDA is one for a second, but this is the index. And you've got important stocks in there that have, as much or more of a higher weighting. Apple's a higher weighted component than NVIDIA. NVIDIA is just kind of like the psychological leader right now in the AI hype, poster child. But Apple and Microsoft are both bigger by market cap. Apple's 3.6 trillion as of today. Microsoft's 3.4 trillion and NVIDIA's 3.2 trillion. So Apple and Microsoft carry a higher weighting. And so I'm very open and would actually love to see that. That would be such if everything, if all the factors and conditions are still there, that would be just that kind of get very aggressive short moment to push up there and stop somewhat below it. So that's it, guys. That's it. The most important thing right now, more important than NVIDIA breaking on the 60-minute chart, is to see QQQ. Now that, again, NVIDIA was a sell signal, increases the odds QQQ will break down, but this is how I have my trend line drawn on the more important daily chart. By more important, I mean more important than a 60-minute chart. And then all the better, you want to increase your odds further, go to the weekly chart. I have the same trend line on the weekly chart. A big red candle down through this trend line, again, it's the same trend line off the April lows, would even further increase the odds. That's how it works. The shorter term charts will get you in quicker. Trend lines get broken, you can jump in on that and sometimes get quite often a more favorable entry, especially if the breakdown sticks. But there's a higher chance of a whipsaw. When you have a 60-minute chart breakdown, you might have an intraday drop. They come in and buy it up by the close, only to park QQQ right back on or above the trend line. And then in which case, we could see that pop. But look, here's the thing. At the end of the day, it's so small from that recent high right here, from the top of the bearish engulfing candle. It is only, won't let me touch there. It wants to move my box if I do. We're only talking from the recent highs, as I pointed out the other day, last week, 1.5%. That's why, to me, I'm fine. It's, if they want to ride it out, pop it at 1.5%. That's not now anything much more than that. It starts getting my fibs all out of whack, and it might even burn through divergences, and it's going to certainly take out the bearish engulfing candle that we put in on July 11th. And so that's why I'd rather not see it, not to mention my current positioning. All right, so that's it. Hopefully that all makes sense. And now let's talk about hedging, which has just been done a great job. Okay, so in the last couple months, we've had, even back here, I put on hedges when we were, shorting the Qs, but more recently, here, these are sell signals, and we had on and off TLT first, and you go back and look at Treasury bonds, both the 10 and 30 year. We've traded, or at least me personally, with near impunity. I think, close to 100% success rate on these TLT, even coming into the year, catching the biggest move that Treasury bonds had in years, coming off that right there, long at the bottom, going up, hit all these 4 targets, and turn around shorting it, calling, after going long here at the lows, calling it up to here, then turn around shorting that break, giving you 2 targets. That potential is only potential until I remove the word potential, and Todd gave it. I was updating this quite often, so now that was just pure play trades. And in here we had quite a few hedges coming here along off the divergent low, and the reasons that I stated in the past. You can go back and read those old posts, but it's basically that if bonds rally, to be short treasuries, to be short QQQ, if you go long bonds, well, you're going to profit if bonds go up, and bonds are probably going to go up if QQQ goes up, because that means rates are falling, and that's bullish for the stock market. And so far, every time we got in, now the trades were also, they were based on that as far as hedges go, but they were also pure play trades, and they worked out great. And then this was our most recent divergent high. Now the one, and again, the last trade on treasuries I gave you, and it was a hedge right here. We went long at the very low, caught up, rallied up, hit my preferred price targets, made a, I think, what was it, 4%, 5, 6 beta adjusted, because you double position size in treasuries because they have such low volatility. And then USO, the same thing. This has been working out just beautifully. In the beginning of July, when we first started getting those sell signals on QQQ here and here, I mentioned, threw this out in videos, is both a pure play short but more of a hedge, and it's just worked out great. So here's the beginning of July. You can see crude has fallen. It hit this point, hit a support level, a key one, so the bounce is likely. That was a drop of about 4.5%. Rallied up. Then when we were coming here, I gave you a gap target zone to either reshort or add on if you wanted to hedge. Fell again, so the timing has been just perfect on these trades. And if you look at what crude oil has done, so even just to have held it throughout, that's about almost better than a 4.5, almost a 5% drop since the beginning of July. Now look what QQQ did. Since the beginning of July, right here, we are up right now about 3% with a maximum pop of about 4, really almost 4.5, about 5 off the lows, but that was on July 1st. This is when we started taking crude, and this is where, remember, the initial short was right there. Secondary short was right there on that trend line break, I believe it was. And so that has more than offset any give backs. And that's, to me, it's a very important part of trading, because I can tell from some of the comments on the site, folks must be only trading, that seems like the equity markets. I get very, very few, relatively few posts, and never, any criticism on gold, natural gas, treasury, all the things that we're trading well. So it's the folks that must be putting all their money in SQQQ, these triple leveraged ETFs. But remember, QQQ, for the most part, now has gone, nowhere since the most recent sell signals, which were right here. No, I'm sorry, my bad. Right here and here. And we're down actually below that first one and the second one. And so there'll be a time, like today, I told you USO, we hit support. It was CL, it was crude oil, crude future. This is it, guys. These were targets laid out. There was your bounce, our initial, get short here. Both, again, based on the technicals, clearly divergent high, and also the logic that The only most likely something to support a rally in the stock market would be falling crude prices. So by being short crude, you're going to profit if crude falls. And if you are short, QQQ, well, QQQ, that's going to give it a net tailwind. And it did, but not by much. QQQ is stalled out. And remember, it's back below where it was recently, and crude continues to fall. So, but we hit support today, as I said. A reaction's likely. A reaction, we bounced a little bit since then. So, as an active trader, you could have micromanaged. I certainly took some off. I've left a small amount on, but I booked profits on half my position. And in the pre-market, you had a little more downside. Yeah, there was. So we came close. But as I said, close enough to that 78.24 target, but at the same time, CL. And remember, CL, the futures are always more important than the ETNs. These guys use the futures to track crude, and they have expenses, fees they roll. Professionals trade the futures. These ETNs go into the futures. That's how they track it. So you always want to, given the, if you see the futures hitting support and the ETF or ETN is close but not there yet, then you may, if that was your target, that's where you cover. And again, it's not a big bounce. And based on this divergent high, remember last time we were short here. This is how much off the divergent high that crude fell. And so I'll give you an additional target, I think, in CL crude futures, which I think is likely after this bounce runs its course. Going off on a tangent, I don't know if you heard the little beeps a minute ago, but I have an alert on Etsy. This is, I told you, I've been hunting out long setups, or what I call plan B, but also pure play. I like to trade long short, and Etsy's one of them. I don't think I shared it with you yet, but I just had an alert fire off because it's at now. So when I get the alert, I look. It's at the trend line now. I had an alert to trigger if it took out this trend line. It's pretty much testing it right now the way I have it drawn, and then I'm going to move this line down. This is the BOD level, about 67.10. This is a nice looking setup. I don't know. Let's see, earnings 8.7. So we've got a few weeks before earnings, but a beautiful looking bullish falling wedge pattern. So one of my favorites right here, guys. There's your potential targets. Let me see if I did clean the targets up. There it is. So you've got targets ranging from a minimum target about 19-20% all the way up to potentially 127%. This target will almost certainly entail the bull market continues to roar throughout 2024 and into 2025. But if near term, if we can get a little more upside, maybe the Qs want to go punch the top of that max bull market target range I have, then Etsy could at least get up. I mean, look, even the first target. If it's going to hit any of these up here, which again, I like the chart, probably will, it's probably going to come on earnings. When stocks, from my experience, when they break out a few weeks, especially when you get to that week or two before earnings, they kind of stall out. Nobody wants to take, too big of bets. And so this one may pop and it may go in here somewhere. It'll probably, we have 3 weeks. It'll probably break out. It may break out today. It's starting to move. It's up 4%. And then you'd have to either roll the dice, hold your breath, hold your nose and hold it into earnings, or close it out, and you can always try to re-enter in earnings. But stocks like this have a history. This one's going to gap up or down on earnings, and right now the chart looks constructive, so I favor it being up post earnings. But unless the stock market buckles, and again, that's why I'm doing this long-winded video. We got a sell signal on NVDA today. QQQ could crack and close below the trend line today too. I just noticed ITB as I glanced at another screen. Remember, I gave you this one as a short back here and then highlight it right here as cover and go long, because you're on the 96, 93 target, which is price support plus the 200-day moving averages plus positive divergence, then a breakout of the bullish falling wedge. And I said the other day, you were here, you could take profits, at very least raise stops to protect profits, and then boom. But I just want to point out, because we just hit that maximum target right there, about 112. I have a 111.90. It's this reaction high. And so there's another example of these stocks. I'm looking for these with positive divergence. These are basically the stock market upside down. divergent lows at support, and that's good for so far about a 14-15% pop in a week right there if you took that one. So at this point in time, I'll say the same thing I did back here. At the very least, tighten up stops to protect profits or just close out. I wish I could tell you I took this thing all the way up to here. If I did, I'd be closing it out right now and maybe even turning around, and because of the market breaking down today, looking to short it. I can't make a strong case. Oh, I want to just update small caps. I know they're ripping. Somebody asked about it last week. I can't make a case to short them now, but if the market breaks down, the big caps break down, the smallies will follow. They're still off their all-time highs. You got big divergence here on the daily chart. I just can't make a case to step in front of this runaway freight train on the 60. We don't have. It's just not my kind of chart. We'll have a super steep trend line. This will probably, almost certainly, bring at least a quick pullback. Where to? I mean, look, if you're bullish, you want to go long, or you want to short, pull back. There's a gap right here. Target the top of that gap around 213, down to the bottom about 211 for a pullback trade. Yeah, as I mentioned before, the small caps are rallying because a bunch of people think that the fact the Fed's going to cut is going to be bullish for small cap companies, because typically lower rates are. And the only reason the Fed's going to cut is because the economy is showing signs. A lot of the important, the reliable indicators, including the most reliable, the jobs market, starting to roll over, starting to show an inflection point. And it's almost an immutable thing when you go back in time and you see that. So again, the Fed will cut. After a rate hiking cycle, they start cutting right before or right when the recession starts. So good luck to the small caps. You can bring rates down to zero. If we have a recession, it's not going to help them. So keep that in mind. And also keep in mind the Fed cuts short-term federal funds rate. They don't borrow from the discount window or the federal funds rate. They issue debt typically ranging out 5 years or so. And so, they're going to need a really healthy pullback in those rates. And plus, by the way, when the economy rolls over, one thing, I think one of the best bets right now is credit spreads. Credit spreads are, it have been at insanely low levels. That's the difference between what junk bonds and government bonds are paying, and they're going to blow out. And so things like that would be a, short on junk bonds, JNK. You can profit from that. And you can see big divergence building on JNK when the times and at resistance right there. So just keep an eye on these, and I'll update with credit spreads, and then to just take it home here, because it's been a long video. The VIX, I gave you the VIX the other day. Looks poised to explode if the breakdown in NVDA and the breakdown in QQQ sticks and it becomes apparent. In other words, we go much lower, another 2-3%. It's going to become clear to the masses that both NVIDIA and QQQ have broken down, and this, you're going to get the most bang for your buck. It cuts both ways. The VIX, like natural gas, I call it the widowmaker. Nothing can put more money in your pocket in short order, and nothing can take money away from you. So if you don't know what you're doing, guys, trust me on this. Maybe just stick, cut your teeth on trading non-leverage one-time ETFs. You can just, you want PSQ is a one-time non-leveraged short QQQ, just like SH is non-leveraged short S&P 500. But the VIX, like I said, is a I think and I gave you, what was it, UVXY, which one I use the futures myself, but this one here, I think I gave you some targets on it the other day. Yeah, right there, VIXY, about a week ago. So if it breaks this trend line, which if QQQ breaks down, it should be a quick move up. It'll be a couple little hiccups along the way, but that first target still is about where I got out to, about 24% higher. Second target's about 51% higher. And you really want to then look at the VIX, spot VIX, and the futures to identify, kind of hone in on your exit points there. And the last thing I'll say to this, in case we do, get some breakdowns and start to get some downside traction soon, is VIX is very important. Don't stay too late to the party. I'll talk a little bit more on this if this thing gets going, if we break out. But you want to exit. Usually I tend to close my VIX trades a little before my index trades, my NQs or whatever I'm trading, hit their support level, because the VIX will usually peak first and then the stock market bottoms. So I've talked on that in the past. I'll cover it a little more, and then I'll just leave it here with UNG. My pick du jour. I really like this one. Got out to you today. I've been getting on it, been highlighting these divergent lows, been putting it out there as a long. This is just the UNG. And remember, the UNG, again, is an ETN. It's not that it's failed. If you don't trade futures, you really don't have many other options. So you trade UNG, but they're just going to track over time. It's not going to track perfectly due to their expenses to roll the futures. I mean, it's up pretty decent today. Nothing big. But what I really like on the futures here, remember, this was support with positive divergence. And finally that divergence played out for this. Came full circle. We put in divergent high. Gave us that nice correction. And these are all double digit. He's well into the double digit moves. Beautiful little bullish falling wedge it gave us. And then that wedge broke out there. Gave us another rally. Put in an equal and still divergent high. If you take the divergence lines across like this, right? That's your divergence lines. And then you had the little divergence there. And that gave us this, right? We've come full circle. We've fallen back to support. I've been highlighting here and here, but this is the best support I've seen in a long time. Right there, about that 214 level. And the divergence has not only not been taken out, but it's grown larger. So there it is. And like anything else, it works out or it doesn't work out. This is the widowmaker. Don't put in more than you can afford to lose. But also, stops should be somewhat below relative to what you're targeting. If you only want a quick pop up to these initial targets, keep your stops a little tight. If and I'll tell you what, really should hold here. It just craps out. But we're near multi-year low. There's really not a lot of downside. Natural gas doesn't go to zero, but depending on how much is in it, if it drops another 10-15%, it's going to hurt you. So that's the key to natural gas. And you can always layer into your position. Take a starter off support, and if it starts taking out these resistance levels, you can add to it. Because one thing about nat gas, I've always said this: when she wants to run, she can really run, and she just keeps going and going and going, like the Energizer Bunny. Same thing when the trend picks a trend, down, 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 down. So I never have any qualms early on when the run starts to get extended and I start to see divergences forming or coming up to resistance levels, my price targets. I'm not adding any more then. If anything, I'm either raising stops or taking profits. But I just want to point that out, that you don't have to be all in here. But I do think it's I already had a position, so I just added to it. If I didn't have any, I would probably add very heavy here. That's just me with stops below. Okay, I'm going to wrap it up here, guys. I'm watching QQQ fight and kick and scream to hold that level right there, the trend line I'm talking about, this trend line here. And so far it is. That trend line just, comes off it generates off the May 31st low. I'm going to color it up for you if you want to replicate it. So this is, I think, a big level to watch today for you, anyone trading QQQ. Bulls. There it is. Your pullback to support. Buy if we're going to new highs. Bears, you want to see that level get taken out, especially clearly taken out. 60-minute, even better if you get a daily close below it. And then that should open the door to 487.29, where Pavlov's dogs will step in and buy. And then when that goes, which I think it would, after a reaction or not, then we go down to that next level, which is the primary uptrend line off the April lows. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.